And we are live. What's up, and welcome back to another weekly edition. We've got the full crew here today. We got charts with Andrew. We've got Jan for his beautiful analysis of what's going on in the markets and trade setups. And of course, myself just along for the ride, pulling up a few news stories here and there. But appreciate everybody tuning in. As always, we try to cover a little bit of everything here when it comes to Web3 markets from an OTC perspective, M&A perspective, and overall trade setups and what's going on. It's been a wild last few weeks here. The prevailing story has been and continues to be the war in Iran, really dictating all markets. Markets are still very unconfident on deploying capital. So not a ton happening. We got a few interesting news stories here. Some good, some bad, as you can see in the title. Quantum computing. Google just released a big article saying it's coming sooner than you realized. We'll dive into that, but that's definitely spooking some people that Bitcoin might get cracked here. That the timeline for Bitcoin to upgrade to post quantum computing has been accelerated. But we're going to look at that and more here in just a little bit. But first, let's dive into some charts. What's going on with the markets?
Yeah, I mean, it's been pretty boring, at least in crypto land.
Come on. It's not boring at all.
It's pretty boring. I mean, look at this price action. You're telling me this is fun? I guarantee you 99% of people are just getting chopped out. They'll get one win and then they'll lose the next 10. There's nothing going.
I like that.
So essentially, we did try to break out a couple of weeks ago. We got these nice double bottoms come in. We pretty much got stopped right on that 38.2 for stop level. Typically that's where dare cat bounces come to die. And unfortunately, we weren't able to break out despite that we had the bullish divergence, despite that we had the oversold conditions and the double bottoms within a reload zone as well. So we're just kind of stuck in this range again now until we either lose these lows down here, or we break above these highs now up here. We don't really know which direction we're going to head. And so we're just kind of stuck. I think rest of the risk market has been selling off. If you look at like equities and stuff like that, it's been kind of just on like a 2-3 week kind of sell off. Looks like the top kind of came in. So, if the risk on capital markets, equities aren't doing well, then it's hard to see crypto performing well as well. And so we're just waiting, I'm still in my long here that took on here. So just sitting and waiting. Technically, we do have a bear div working now in the MACD. And so we just need to start seeing momentum start shifting again. Maybe we need to get back into that oversold condition. If we are looking at levels of long and you want to buy bottom of the ranges, then, candle body lows are always good areas. As you can see, try to stab in there twice already. So you could try to, play that. It does look a bit bearish. We do have a head and shoulder pattern here now, and so it's not overly bullish looking here. But if we can start converting some more W's again, then, we can get kind of excited. But until then, we're really just sitting and waiting. Ethereum, kind of same thing, really not doing much. We're just sitting, waiting. Same thing, we broke out. We got halted right at that 38.2 for a stop level. And so now we're just rearranging again and seeing all right, well, do we want to test the bottom of the range? Do we want to break out? We have to wait for another kind of consolidation, nice little double bottom, hopefully. And then hopefully we can actually start rallying back up and above that 38.2. If we can't get above there, then, I do think this is probably going to continue a bit lower, as we do have lower objectives still targeting, looks like around 1,300 there for ETH. And then for Bitcoin, we're still targeting around that 52K area. So that actually would be that lower reload zone that we've been kind of eyeing. So So yeah, crypto probably just have to chill a little bit. The one thing that I do like on the weekly chart, at least, though, is that we do have a weekly divergence now on the MACD. We are quite oversold as well. And if the market doesn't sell off even more and we actually start kind of heading back up, this could potentially turn into that weekly double bottom. And weekly double bottoms are generally what I look for. These are typically what we think when the trend is shifting and ready to rally. And so if we get that coupled with the bullish divergence, oversold condition, reload zone, then you got yourself a full setup. So, it takes 7 days for these candles to print. So it's still quite a bit of a ways to go. I don't think there's any really big positive news ahead of us right now. I mean, we still have the war stuff lingering above us. And so we're just ranging.
Come on, it's gonna be more positive. But yeah, this was
a lie to people and be like, yeah, go out and buy shit and lose money. Go ahead. I don't care. Like, do what you want to do with your money, guys. I'm pretty much mostly in cash. Got some Bitcoin stuff. Even in my equity portfolio, I'm like 70% cash now. I mostly just have like oil names open. And that's what you got to do. If you want to be a good trader, you want to survive in this market, you have to know when to be in the market. You have to know when markets are in a good environment. Like, not being in a trade is considered a trade as well. Something to consider. Look at altcoins. Most of it's pretty much the same as Bitcoin and ETH, just sideways consolidating, not really doing much. Some of them are kind of just dying, like Say. But for the most part, honestly, like names haven't really moved much since the last couple of weeks. And so we just have to wait. It's the boring part of the cycle where you're literally just waiting. You're hoping these positions will break out. You're in your setups, and all you can do is either wait or you get stopped out and you hop off. But yeah, I mean, most names are just like, they're not ready to break out, honestly. Big double top now coming in, 0. Probably going to have to hop off on scratch on this name. We did hit more than 50% of our price target that we were hitting. So, you can probably just hop off here. I actually probably got to close that quite soon here. So that's kind of crypto. If we look at the general market, like equities, we've been kind of like falling pretty hard the last like few weeks. Losing this critical low was kind of big. Now that we lost that, tops are clearly in. Even if you look at the weekly chart, it looks pretty nasty. Double tops, weekly double tops were in here. Targets that I'm looking for, if we're going off of this entire range from the lows here, it's a 1-year range. 38.2s are always what I look for. First stops, right? It works going both ways. So 38.2 is kind of where I'm hoping that prices will come down to. Maybe we have to go back and forth a little bit and we tag it. And then hopefully if we can get some kind of consolidation around here, that's when I'll start being more aggressive on the long side. But for now, I'm comfortable just sitting in cash, closed out some positions that were stopped, and just waiting to see better market conditions. I think clearly, like with the war stuff and like the oil shortage, it's impacting like most things in our lives. Like oil is needed for almost everything. And so if oil prices are skyrocketing, everything gets expensive, cost of production gets expensive. And so, yeah.
I mean, things are not great, to be honest. Like, are you expecting that we're going to go as low as during COVID times?
That's pretty far. I don't think we'll go that far. Like, if you're talking about S&P, COVID time was way back here, right? I don't think we're going to go that far. Like, if I'm looking at a range from all the way there, then, 61.8 to 78.6s are generally what I look for. So that's like around here. I do think that's quite a far dip. Like, generally, stock markets don't crash more than like 30, 50%. But if it does, then, it does, right? So what is that? From the peak high all the way down, 50%. So that'd actually be right into our reload zone, technically, which is pretty like healthy correction, in my opinion. You can see where that last previous base was right there as well. But for now, like I think we can just work off of this range, off of these lows, because that was kind of like that last previous bottom. So if we're just going off of this range, then I do think like a healthy pullback coming back into the reload zone here would make sense. Also, the 38.2 for stop area would also be kind of where I'd be looking for longs. But yeah, I mean, if you really want to get like cheap bids and really want to be patient, then like coming in like way down here would be much smarter.
I think it's going to happen still. Like there's a lot of uncertainty, both on the bond market, both because of the war, and overall, like the world is not in a great shape. There's a lot of talk about AI taking jobs. Like, where are we going to get the money?
We just print it, endlessly print. Just
like if you think about how the society works, society needs people to work. If there's no people working, there's no tax money. If there's no tax money, there's no spending.
Yeah, so they'll start harvesting our organs. Who knows? I actually don't know, but no, it's a good point. Like, you know, the best you can do is just try to like. I think that's why a lot of people are trying to risk their capital in like markets right now, because they think it's an easy way to escape and like accumulate wealth. Which it is. It is a great way to accumulate wealth, but you still need to learn the process. You still need to have a trading plan. You still need to understand trading setups. Like, you always got to make sure to have those in place, and then it just makes things a lot easier. You know?
But to be honest, like on that front, I read some statistics. Like SP 500, I think the pullback is now what, 20% or 30% from the high.
Let me check. Let's see. It's like about 10%. It's not too bad.
Yeah, I think like we still need 10 to 20% to go, but after that, like statistically, usually you get a very good entry.
Yes, like almost every time. Every time you see these massive big dips, TradingView is also becoming lame. They're not giving me more pre-reserve data. Like, that's pretty lame.
You have the free version, I see.
I don't. I actually have the premium. That's why I'm like kind of like, what the fuck? This is lame. I think it's just like too intensive on TradingView servers probably. But if we go off of those, right? Like 30% is like, it's pretty standard. And like usually after these big dips, like market just goes right back up. Like you look on a 5-year horizon, like it just goes right back. Even if you bought the peak here and you like, you know, you got nuked and you just held on, you'd be in profits right now. You'd be up a double. So in the long term, we know this market's gonna always go up. There's gonna be downtrends. And during those downtrends, that's when you want to be looking for longs, not when things are flying to like all-time highs, right? You want to be taking profits as things go up. But like if you look on a 5 to 10-year horizon, S&P, NASDAQ, Dow, you know, Russell 2000, all these, they're always up, like almost always up. So.
But I agree. Like, market is what it is. Like,
yeah,
we're still gonna go low. I do agree with that.
Yeah, we're definitely in a bear market, so you know we just have to wait, and that's the hardest thing. It's just like being patient and waiting, and like being focused at the same time because you still want to like spot opportunities, right? So like even like gold, for example. For me, I think this is a great opportunity. Well, I don't know about great, but I think I see a trading setup kind of. You know, we got that nice like sell off. We got that clean correction. We hit that 200 SMA, 88.6 level as well. Also, like these like double bottom structure that held. So there was a lot of reason for this to like hold and bounce, like technically speaking. And then now we got these double bottoms printing here within a reload zone off of this low, this high range. And so like I'm willing to back capital and be like, all right, well, I think there's a bit of a swing trade possibly coming in here. So I'm willing to risk it. So I think metals are trying to like come back to life here. We've had like quite a bit of a sell-off, but I do like how these double bottoms are starting to come in. I think silver could probably come in a little bit lower, but they're not always perfect. So for me, I think gold looked kind of the best. So I am long gold there. Looking over at VIX, VIX in US dollar. VIX is still a little bit high, but it is coming off a bit now, a little bit. So that's good. US dollar, still in the short reload zone. So this is, where we should expect to see tops come in, or at least to see some resistance. And as you can see, we've come into this area a few times. We tried to break lower. Looks like they're trying to wash these stops here now again. And if we do break higher, then it means, we might have to start climbing up to like, the higher ranges. But based off of this high, this low, we are in that short reload zone. So if oil starts rallying, then, US dollar should technically keep climbing up with it. But it's not like it's because it's like extremely bullish market. It's just more of a proxy.
So what do you think will happen if the US goes into full-on war? Like we go boots on the ground.
Then I think equities market will probably sell off even harder. Oil will probably rally. US dollar should rally because, again, you need to use US dollar to buy oil. I think in the beginning it wouldn't be good for anybody, but it eventually stables out.
So to be honest, like my whole situation report from the war and US strategy is the following. They took out Venezuela, so they have oil.
Yeah.
They took out Iran because they have oil. And Dubai and other Middle Eastern countries are now gone. So the only big winner in the oil wars is going to be US, because US is one of the biggest oil producers on earth. And because of that, they want to keep this war going. And also now when the Ukraine attacked Russia, which is near actually Finland's border, like we have 30% or 40% of all oil now gone offline. It's going to take a while. This is good for US. So I would assume that the US dollar will be strengthened.
Yeah.
Right?
I mean, that makes sense because like I said, you need US dollar to buy oil.
Yeah.
Well, there's a lot of theories out there that have some validity anyways around, kind of what you're saying, Jan, to isolate China's oil capacity, right? They're because a lot of their oil is coming from Venezuela. Use the excuse of the cartels and drug boats coming into America as an excuse to go in and take out Maduro there. Now you have whatever excuses they're using for Iran, which is another major source of oil for China, to go and cripple that source of oil for China. So that I definitely think there's some validity to that argument, but I certainly don't think that's the only reason that they are perpetrating these.
Of course. But like from a strategy point of view, like if you look at what the US is doing, it's hurting both Russia now very badly, and it's hurting both China. And energy is going to be the biggest like resource in the future for data centers, for whatever you are producing. You need oil. If you don't have oil or energy, you're fucked. So I think despite all hate US, like I understand them from this point of view, but other than that, it's horrible what they do.
Seeing the you mentioned the oil production. I saw recently, have you seen Japan has now completed the process creating synthetic oil?
Yeah, but they can only produce it 100. If it was 10 or 100 barrels a month or even less.
Yeah. But
and 2030, it's gonna take until 2030. They can do $1,000 barrels a week or something like that. But yeah, hopefully we have something new. But like people out there, prepare. Like this is gonna be very bad for a lot of economies. 2-3 weeks in, I think, predicting. and we're gonna see real things. Australia is a good example. What's happening? Slovakia, same thing. Restriction on oil. It is gonna be next COVID.
Yeah, you're seeing stuff in Europe where they're at this point just recommending people don't drive or don't go out of their house or whatever. It would be very easy for them to start implementing that as a convenient excuse to restrict people's travel, restrict your usage of certain goods, et cetera, et cetera.
And they've already done it with COVID, so why can't they do it again?
They're kind of trying to run the playbook again there.
Yeah. Oh, fun stuff.
No, thank you.
Yeah, so I mean, oil market, as you can see, we're still climbing a bit higher here. It did try to double top here, and then it just kind of ran the stop yesterday, and then now we're kind of slowly backing off. Obviously, anytime there's any news about them bombing any of these facilities or whatever, oil seems to rally and continue on. Seasonally, oil has a window all the way until May. So, we are kind of into that final month here. But it's just, I don't feel comfortable longing oil here now. You're supposed to buy in the middle of February. You buy middle of February, you sell by May, you made money 9 out of the last 10 years, right? That's the same. And so now we're in the short reload zone. This is where we should expect things to kind of slow down at least a little bit. But if, the war stuff is a bit of a wild card here for us. So if you're already in longs, great, take profits as you need or whatever. But for me, I wouldn't want to be chasing oil up here. I'm more in the position of starting to take profits for myself. But yeah, we'll see what happens there.
Yeah, if they go and what's the name of the island? I can't remember. But yeah, if they go put boots on the ground and take over that island, that's going to get real messy, and oil could absolutely fly.
Yeah. So
where do you see oil going?
Where do I see oil going if we do break out of that level?
Yeah.
I always do these nice harmonic type setups. What I like. So you got your A, B equals CD. So you got your A, B equals C, D. It's a kind of harmonic type setup. So my upper target would be that 141. I don't know why that line is there. That shouldn't be there. But so my target would be 141. It's kind of what I'm looking at. If we are going to break out of here, realistically, seems like a decent level. There's an even bigger BLT setup. So if we look at the actual higher target, it's actually 179. So I got 141 as one area. I got 179 or 180 as another target. And then if we look on weekly charts, this is
so here's an interesting fact. When oil hits $120-$125 range, that's usually when the whole economy starts to really crash. Because oil at those levels for a lot of manufacturing work is not it's not profitable anymore at all. And I'm I don't want to be a doom bearer or anything else, but I do think 2-3 months or at least 2-3 weeks, buckle up, and rest of the year just save as much money as you can. Be the one that don't spend.
Yeah. That's the best way, especially in bear markets, right? You want to just save as much as you can.
An easy way not to spend money is to just be poor. If you don't have it, you can't spend it.
Can't spend what you don't have, yeah.
Exactly.
But yeah, that's all I got for charts for today. Don't really have any new picks, really. The only thing I really longed recently was just gold. So yeah.
All righty. Well, where do you guys want to start? I guess we kind of already hinted at this story here. We'll go. Hop start with this one since we're already talking about oil. Binance set to launch oil and gas futures tomorrow, April 1st, with up to 100x leverage. First comment, fantastic as always. Who asked for this? I'm sure the old mantra, if you build it, they will come. I 100% believe people will be aping and going 100x long on oil. If you give degens a new opportunity to go below funds, they're likely to do so. I absolutely think this will get utilized.
Well, I think what Binance or CZ saw was that like Hyperliquid's making so much money with their oil futures. So
here's the thing with Hyperliquid, like on Binance. I do think Hyperliquid has a clear advantage now because of regulation. And I do see Binance, like, they're very much like, usually they used to front run everyone, but now they're in the back. Like, are they turning into a legacy company, you know?
I mean, this tells a lot of the story here. Hyperliquid, $880 million in inflows last month. BNB chain all the way down here, net negative. God,
BNB chain has always been shit. Like, there's literally nothing on there.
Arbitrum absolutely bleeding.
Oh my lord. It's weird too, because like all these dexes are built off of Arbitrum.
Yeah, Polygon looks pretty good, to be honest.
Yeah, I think they've been deploying some capital, attracting new people to the chain.
Yeah, ever since the rebrand, they've been doing.
Hyperliquid is also gonna have a prediction market soon, so it's gonna be an interesting time.
Seems everybody's launching a prediction market and a perp dex right now.
Yeah, at least on the M&A side.
Yeah.
Sticking with that, call sheet just recently approved for margin trading. So you're now going to be able to leverage your prediction bets.
Jesus. This is when you thought it wasn't already leveraged.
Just what the market needed, more leverage.
Yeah.
In terms of economic news, last night we had both Trump and Powell speaking. Haven't seen a whole lot of news stories on anything that was said, so going to go ahead and assume it wasn't anything revolutionary. But the rest of the week, we've got some CPI numbers coming in out of Europe, consumer confidence, job openings, core retail sales, crude oil inventories. I think in the face of what's going on from the macro perspective with the war and stuff, none of this is really going to have much of an impact on the markets. None of these announcements here. Really what happens with the war, whether we put boots on the ground, whether things escalate, de-escalate, peace talks could have a huge effect on the markets right now. But until the war comes to some sort of resolution, these economic numbers are going to have a muted effect. Not that they'll have no effect, but certainly not going to be the leading market influence as long as this war continues to drag on. Popping over to Poly Market, that this really kind of tells the story of what's going on. Usually when we check in here, not a lot outside of the war predictions and sports predictions in here, topping the charts. So, that's similar with what's going on with what we're seeing across Twitter as well. Probably the biggest story out there is exactly what where's my first story on this? Is the quantum computing. Here we are. Yeah, Google doing a new study or supposedly has a new algorithm that they now believe will only take 9 minutes for a quantum attack on Bitcoin. For those of you familiar with how Bitcoin works, a block is published every 10 minutes. So having an algorithm that can break the SHA, that can crack SHA in under the 10-minute blocks, it poses a serious threat. Now, they did not release the actual data here. So they're saying that Google research demonstrates 20x more efficient implement of the SHA algorithm or Shor's algorithm, which could break the keys within minutes. only needing around 500,000 physical qubits versus most estimates were over 1 million prior to this. They're not publishing the actual circuits. They're saying that it'd be too dangerous for them to do that, but instead they published a ZK proof, supposedly providing that they've actually done this. Essentially what they're saying is that most people are estimating that now instead of mid 2030s, they're saying that we need to make, the Bitcoin needs to make itself its post quantum transition before 2029. So just apparently, like everybody else, Bitcoin now needs to transition as well. We're gonna have trans Bitcoin in the future here.
Oh, that's the end of crypto, guys. Pack it all up.
That's
become oil traders.
So to me, this doesn't. I don't know. We'll have to see if there's any validity to their argument. That's yet to be seen. But the big picture, in my opinion, hasn't changed at all. Because if they crack, it's not just Bitcoin that will be affected. If they can crack, if the mathematical algorithms that protect Bitcoin are cracked, it means your bank account's cracked, Wall Street's cracked. Literally everything is now hackable. Yes, it will obviously affect Bitcoin, but it will affect life as we know it in general. The electrical grids, the nuclear codes. It's kind of a race right now across all these different industries to transition to a post, they call PQC, post quantum computing. I think the issue that is getting the most attention with this is somewhat of the lack of efforts, or because of the the decentralized nature of Bitcoin. It's not like the Bitcoin chairman sits down and says, okay, we need to focus on PQC. So it's moving slower than they'd like to see. Whereas a lot of the US government, some of the centralized Web2 rails, banking infrastructure, et cetera, are the nature of a centralized organization is often speed, and you can attack these problems easier. So that, I believe, is the big concern right now, is that Bitcoin's moving too slow versus the U.S. government, banking, these other infrastructures, and becoming taking that post quantum transition. So definitely a threat, something we do need to see more action on in our industry. But big picture wise, I think a lot of times the focus gets put on Bitcoin and crypto of, oh God, it's the end of crypto. Well, it's the end of a lot of shit if this happens. So everybody that is in technology, from banks to, the US nuclear codes to, Bitcoin and crypto companies, all need to be paying attention to this and all need to be working on this. It's the age old offensive versus defensive technology battle, bow and arrow versus the shield versus crossbows and armor to firearms to whatever. Same thing goes when it comes to technology, and the defensive tech is behind right now. We're going to need to see what emerges in the future, because it could be a very, very turbulent shakeup as people figure out how we, what new technology emerges, what the internet looks like, what banking, et cetera, looks like post quantum computing.
Well, I think good stuff here also, like we had today 0-day vulnerability that came up. So basically one of the biggest GitHub repos got hacked, or it actually had a 0-day vulnerability. So what does 0-day mean in cybersecurity? It basically means that you find a code, or you have something in a code base that you haven't found before, and you have 0 time to fix it. And today was one of the biggest accidents or incident that happened. And this is just the start with AI. And I do agree with you, quantum computers, they're going to be even more fucking powerful finding these. But Bitcoin is definitely not going to be the one and only where this is going to be. This is going to be like energy infrastructure, governmental infrastructure, all these things that are happening. It's going to be even more worse. So I think Bitcoin is the least thing that we should be focusing on. But the interesting stuff, like what we have now with Claude, is already there's a guy called Nicholas Carlini. You guys can check him out from Wikipedia, but he's one of the OGs of cybersecurity. He had a live seminar 2 days ago showing how Claude is doing these 0-day vulnerabilities live, just by simple prompting. And this is one of the best OG cybersecurity guys ever,
Mhm.
and he's saying like, "Yep, like Claude is already better than me." Like, live. He's doing this live, so yeah.
Yeah, they're saying now that the again both offensive and defensive within Claude, that Claude setting it up as a kind of defense against other AI attacking it is better than pretty much any cybersecurity system that people are paying. Big companies pay tens if not hundreds of thousands of dollars for these services monthly, and now you could set up Claude agents that are twice as good for a fraction of the cost.
Yeah.
But there's a lot of factors that go into this quantum computing equation here. This is a big advancement. Doing it for 500,000 physical qubits versus 1,000,000 is a major advancement in this technology. But there still is a lot of bottlenecks outside of just the mathematical computation power needed. There's a physical component of it. There's the energy components of it. You need to be able to build the chips, and things like the oil prices being through the roof. Like this, there's a whole lot of bottlenecks that are coming together that really make this equation hard to figure out. When this is going to become a serious threat. I don't think it's an if, it's a when at this point. But it's a race. There's a lot of people competing for these limited resources, and that there's a lot of money being thrown into both sides of this race right now.
No, I agree. Interesting fact also, like the $200 version that Claude has, in reality, it's costing Claude, I think, between 5 to 15K per person.
Wow.
Yeah.
Crazy.
So I think, like also from the AI side, I think this is going a little bit off topic, but like these versions that Claude and ChatGPT, they're getting better and better. They will cost more and more and more, and this is going to be a zero-sum game eventually. Like all the richest companies and people are going to be having the possibility to have the best AIs, but if you don't have money, it's going to be very hard to be and having an edge.
Yeah, definitely going to be a big factor there. But like anything, the best cure for high prices is high prices. The more opportunity there is to make money in a sector, the more people are going to compete for it. And as the technology advances, the prices come down. Will eventually come down once the manufacturing of once energy starts getting solved and we can produce more chips, and all these bottlenecks start getting solved, prices will eventually come down. You look at things like the probably the most common example people point to is like plasma TVs. When plasma TVs first came out, they were like $100,000 or $10,000. Only you got to be super rich to afford one. And now you can go out and get a TV that's 10 times better than anything that we were looking at in 2007, and it's like $200.
Yeah.
Right. So it'll take time, but eventually that curve will catch up. And they're doing some interesting stuff. I saw a really interesting article today. There's the Chinese, it's Gui models, and they're these micro LLM. You can buy the hardware for them, and the article was about, I wanted to say it was 39,000 agents running on one of these on a local. So the difference would be kind of, I think in the short term, the divergence, you'll have these big centralized LLMs like your Claudes, your ChatGPTs, et cetera. And then for people that can't afford those, you'll start having your own locally run models that are, agent specific models that are trained themselves, that you have your own internal data for it. And it's going to be interesting to see those develop as well. But yeah, I mean, we could face an issue here very quickly where, right now we all have our own agents running, and pretty soon that we're completely priced out of the market for a number of years.
Yeah, but I'm very happy that there's open source. Like look at Linux, for example. It's one of the biggest dev interfaces ever done, and it's all open source. I think there should always be open source. Bitcoin was open source. Like let's see. I'm very skeptical about the future though.
That's why we gotta make that money now, boy.
You're gonna close some deals, boy.
Yes, sir. Well, we've got massive Tether news. Tether agreeing finally to a full audit. Well, we'll see what kind of audit they come out with, but they're getting the big boys in there, KPMG and PwC, Tether hires them for a USDT audit. This has been something that's been requested for a long time. We'll see how expansive and how thorough of an audit they're going to actually allow. But maybe this will finally put an end to some of the Tether FUD recently.
Tether's going to zero, bro. They're gonna be like, oh shit, they have nothing.
Yeah, I mean they obviously have something put in place here. They wouldn't be doing this if if it was good.
It sounds like they're gonna have a freaking IPO.
Yeah, very likely. But the long-awaited Tether audit is coming down.
Dude, imagine if the audit is gonna be like horrible.
That's what I mean.
It's like absolute shit. Like there's nothing backing it.
Yeah, that's what I'm saying. Like that'd be devastating.
KPMG's report just comes out and it's just like, why would you have agreed to this? This is just suicide. The other big story we had in the title here today: FTX set to repay 2.2 billion to creditors. Now, this was said by the end of March, coming pretty quick up on the end of March. I haven't seen any of these payments been distributed yet. I have not heard anything about that, but this would be, obviously great for a lot of creditors, though we've heard this news many times before. So timeline is coming down to the wire here. I would not be surprised if this gets delayed or even indefinitely, if not pushed back further here. But if you are an FTX creditor, some relief might be on the way soon. One last story.
Lawyers have been earning.
Yeah, no joke. One last fun story to kind of end things off here for today. I thought this was pretty funny. P2P.me gets caught basically gambling their own treasury on prediction markets, betting on their own raise, and naming their account P2P team. So essentially what happened, they actually released a public statement on this. It's amazing what people are getting away with. They put out a public apology, which means absolutely fuck all. It's just basically they know they did this. They did it anyways, and now it's like, oh, sorry about it. But essentially, their raise was coming up to an end, so they opened up a secret pool, betting that they were going to close their raise above a certain amount to make a bunch of extra money that's going to go back into their treasury. And then post come out and say, oh yeah, sorry, we probably should disclose publicly that we were doing this, but well, it's over and done with now. And the money went back into our treasury anyway, so don't worry about it. Yeah, that's the new scam that's out. Maybe you don't even need to launch a token anymore to make a bunch of money as founders. You just need to open a poly market pool. You're going to close your raise at above a certain amount. Well, like who's the counterparty to this? I mean, like who's betting against this? Maybe one of the VCs that's in talks with them. That's like, oh yeah, we're for sure gonna give you guys $3 million, and then like the last day, just like, nope, rug. Thanks for playing. So maybe that's gonna be the new venture model is rugging projects and opening up. Maybe they're gonna be the counterparty against these projects that are opening pools on their raises.
Whatever you can extract. Whatever you can expect.
I mean, the end is near, boys. We gotta get the last pieces out.
Maybe I just came up with the new business model for us. We're gonna start Acquire.Fi Ventures, and we're gonna go out and raise a fund and start talking to all the talking to a bunch of companies that we're gonna invest in the open poly market pools, and then pull out the investment at the last minute. Just cash in on poly market pools. Well, the venture model's been dead. They needed something to give them some new exciting opportunities. Yeah, that's what we have for news stories today. Again, another relatively quiet week in the Web3 world with the war going on here. Not a lot of exciting investments happening. Not a lot of explosive charts to look at. Just everybody kind of sitting on their hands. Not a lot of confidence in the markets on Web2 or Web3, TradFi or in blockchain, but definitely some cool stuff going on behind the scenes at Acquire.Fi. We've got some very big and interesting deals that we are working on the M&A side of things. Very excited to see those moving forward, and looking forward to some big announcements coming out in the next couple months. We just had a big announcement last week that we covered with the Katana and IDEX deal that we got done. I believe we have another deal we should be able to announce hopefully as soon as next week. And then Q2, we have some probably some of our biggest deals yet, at least in terms of name branding, maybe not dollar amount wise, but as far as the caliber of the brands themselves that we're working with both from the buy and sell side. So very, very excited. A lot of great things happening behind the scenes with on the M&A front. The OTC desk continues to be out there hustling. A lot of that market is crazy and moves so fast in terms of what people actually want. So, and not something we can usually publicly announce, but anyways, lots going on behind the scenes. If you are interested, if you're a family office, a fund, a project that is looking to have an acquisition, feel free to hit us up. We're always looking for new quality projects and quality investors to work with. So let us know. You can reach us on LinkedIn, on X. You can DM any of us directly on Telegram. We have a great deal flow channel with a lot of fantastic deals moving in there as well. So maybe that's something we can cover real quick here before we sign things out. Let me just pull up my LinkedIn here real quick to give you kind of an idea of what we're talking about in terms of, come on, there we go. Share my screen again here. So yeah, as you can see here, we currently have more than $2 billion worth of buy-side mandates covering a variety of sectors. So if you are a project right now, majority of what we're looking for is stuff that's in the $5 to $50 million EBITDA range. This is globally, any market is okay. The core sectors that we have mandates for right now, payments and on and off ramps, custody and treasury solutions, compliance and risk platforms, staking and network services like validators and RPC businesses, market data and analysis tooling, any sort of trading technology from trading terminals, market making technology, trading bots, etc. A lot of demand for trading technology, especially if you have a large user base, as well as Acquire.Fi, so sports books, crypto casinos, prediction markets, you name it. So if you are a project or you are working with a project that you think is interested in potentially pursuing, some sort of acquisition or exit, we have more than $2 billion with vetted buyers. These are both well-capitalized private and publicly listed companies. So we'd love to hear from you. Love to chat with you about how we might explore an acquisition opportunity with you guys.
No, absolutely. I think there's good possibilities now. If you're a seller, you can get a good value on your company. And there's a lot of actual legacy companies and new companies coming into this space looking to acquire.
Absolutely. Yeah. We've got our buyers traditionally have been, really 95% Web3 native, which is great for a number of reasons that, they walk the walk, talk the talk. They understand this industry very well. But as of late, we've really seen a big shift, a lot more TradFi type companies, P&E firms, investment banks, large Web2 companies. They're starting to understand tokenization, blockchain, Web3 is, the future of where this technology is heading. And so we have more and more of those types as buyers coming in, looking at acquiring companies with solid teams that really understand this industry to kind of get a leg up on their competition when it comes to blockchain, especially in the things like stable coins, payment infrastructure, et cetera. That's a very hot narrative for a lot of the Web2 and, TradFi type companies. So happy to have a chat, even if it's just, maybe if your timing's not quite perfect, but you've been thinking about it. Happy to explore, just, talk about high level where the market is and where things are headed. Yeah, definitely feel free to reach out. We're happy to set up an introductory exploratory call.
Agree.
Cool. Thanks for tuning in, everybody. Really appreciate all the support, liking, subscribing, sharing, and everybody that tuned in live here as well. We'll be back next week with more updates on the stories we covered today, updates on what the war is going on and how it's affecting markets, and take a look at maybe some new spicy charts next week. Till then, take it easy and stay safe out there.
Take care, guys.